morning, good afternoon, good evening, yWhales, wherever in the world you are and whatever day it is. We have, again, just one of those super special, some of the rock stars of Web3. We're here with VALK, Antoine and Elie, who's having a couple audio issues. So Antoine's going to be interpreting for him. But again, we're just really lucky and really blessed to be so much in the center of the Web3 movement right now. And so we're going to take a second and really we want to hear kind of Antoine, if you wouldn't mind, kind of what it took to get you to the point, right before VALK, your time in the industry, your time around blockchain, crypto, because what you guys are doing is really, really big, to say the least. And I think a lot of people agree with that statement.
So first of all, thank you very much for inviting us onto yWhales. We're super excited and I have heard a lot of good things about the program. In terms of what brought us to the point of building what we're doing right now with VALK, and in general getting involved in the whole ecosystem and Web3 movements. Everyone has different personal stories. I can speak a bit for myself and explain Elie's path into up until Web3 and into crypto originally. So initially, I was not. I do not come from a pure crypto background. I've been working in several industries, but mainly centered around finance. So I started my career in investment banking, helping startups and tech companies raise funds. So back then, that was back in 2014, 15. There weren't many blockchain applications out there, but very early on, had a contact with entrepreneurs, with new solutions that are trying to improve industries and transform them. Always, I would say, and always looking at this from the financial angle and helping them raise money through VCs and others. I then continued in the world of finance, but focused around the energy industry. So worked in private equity and in M&A, helping renewable energy companies, mainly developers of infrastructure, wind farms, solar farms, get the necessary financing. Sometimes we also invested in the project in the private equity firm where I was. And this basically helped me get a well-rounded understanding of how traditional finance works. And obviously I had been following whatever was happening in crypto and blockchain from afar. Had done a few investments myself, but nothing major. But it was really, the moment when we started discussing with Elie, what is this infrastructure behind crypto? How can it be used? That, we realized that all of this traditional finance potential could be applied and could be really improved, especially on the infrastructure side, thanks to blockchain and crypto. I don't know if Elie's mic worked, but I
tried to fix it.
Now it's better. Okay,
Success.
so we can speak.
There we
Perfect.
Go.
That's amazing. Cool.
So yeah, basically it's when 2 years ago when we started speaking with Elie about, how does the infrastructure behind crypto work? Can it be applied to traditional finance? That we launched the project, and then we'll tell you about the few iterations that we've had. But it's been basically a step-by-step and opportunity-driven path for both of us to get to this point.
Awesome. Elie.
Yeah, perfect.
With a working mic.
Exactly. So sometimes you invest in a good PC, but you still need to get this extra cam that comes with a mic to plug it into your USB output and for it to work. Okay. So so as Antoine was saying, so I come more from a technical background, computer science engineer. I was working at the bank, BNP Paribas. And then in 2015, there was some people asking about blockchain and so on. So I was very interested back then. And I started working, funny enough, on blockchain even before me getting into crypto. So usually it's the other way around. Although I knew about Bitcoin in 2013, but it was like my wife told me about it, and I said, "Oh, okay, it's nothing." And I didn't even read the white. I didn't even read the white paper or anything, and I moved forward. And then in end of 2015, the bank started looking at this technology to see what they can do with it. In 2016, I was staffed on 2 projects, cash management and trade finance, one after the other, to be the lead architect for implementing proof of concepts. You know, like big banks, they like proof of concepts. So we're the expert in that. So we built, funny enough, when we start looking at the technology, the first blockchain we looked at, not even Ethereum. Ethereum was created in 2016, and the first blockchain that I have worked on was NXT. I don't know if it exists.
That's an old one.
Exactly, it's a very old one. So NXT was the first one, then worked on Ethereum, and then Hyperledger. So yeah, I was the lead architect for those projects. Then in 2017, I decided to leave to join a company called Viewfin in Shanghai. So I worked with them on their centralized exchange. I was responsible for adding the liquidity to the exchange. Then moved to another company called Link in Nanjing, which was building a decentralized exchange for cryptocurrency. So it's not the DEXs that we know today with the AMM, but the idea was to build a wrapper for each token. So we take each blockchain, we create an abstraction layer of those blockchains. Sorry if I'm going into a lot of details. We can go over them later on.
We're not going to slow you down, man. This is your passion.
Amazing. And then, so we built a decentralized exchange, mainly a wrapper for all the token technology sold to a private equity firm that was heavily invested in crypto, stayed with them until the end of 2018, and then came back to Europe to start the journey with Antoine. So it was very fun because in 2018, there was a big boom and hype about taking real-world assets and tokenizing them. And the promise was the liquidity. Of course, by tokenizing assets, you don't create that liquidity. Liquidity has to come from people willing to trade, right?
Yep.
And crypto emerged because it was first easy to have this liquidity, but there was an intention to have this liquidity, which is not the same. And if we speak about private equity,
unless you're Tether, and then you just create your own liquidity.
Exactly.
Out of thin air. So we appreciate that you guys are actually going the right way.
Yeah, basically, what a lot of people were promising and saying is that because the asset is tokenized, it's going to be easier to trade. And the reality, if it's the same underlying asset with the same characteristics, whether it's wrapped around the blockchain standard or pen and paper, whatever, is exactly the same thing. What is a transformation with tokenization is the infrastructure behind all of these assets, and then what you can do with it. Can you use them as collateral? Can you list them, transfer them easily and in an easier way on exchanges and so on?
So one thing that was very important in our journey in tokenization, mainly the driver behind the liquidity that came into crypto was retail. It was not institutions in the beginning, right? And we thought in the beginning when we start working on asset tokenization that those assets can be proposed to retail investors. And we directly realized that it will not be that easy. You would have to go through the same route of selling a security, meaning not everyone has access to it. Only professional or some type of investors. And this was, in my opinion, blocking that liquidity that we could have been able to unlock if we gave access to others. Now, of course, I understand all those regulatory requirements, but it was a blocker for the security. Long story short, so we built a tokenization platform. I'll let Antoine speak more about it later on, and how we moved from this tokenization platform into the Web3.
So the concept, really was born with, after years. This was not, in some cases we hear about like, hey, I learned about crypto last week.
No.
I wrote a quick protocol and now I have, $1 billion in assets. You guys have, you started, pre-Ethereum, which is actually pretty rare. From a smart contract, DeFi perspective. So that gives you guys a different, really a different outlook on what we're seeing today. And then really attacking the problem.
Yeah.
So
yeah,
And
basically,
Antoine, I think it's worth speaking about our technological choice because this tokenization platform was built, funny enough, beginning of 2019 when we started on Ethereum, but we shifted very, very quickly on another technology. And now we are also looking at what do we stay on the same technology? How is it helping us or not?
fabulous.
yeah. So basically, look, we've been working on this for about 3 years, and we are constantly, speaking and trying to sell and push our solution to regulated financial institutions. So, our office in the city where all these banks are, as you can see, and we have a very client and market-driven approach, right? So, our technological choice initially.
Antoine, I'm sorry to interrupt you. I will not show my background.
Yeah, exactly.
It's not the city.
Exactly. So basically, the idea was that initially we very early on understood that, if banks and financial institutions want to adopt blockchain standards for their infrastructure, it needs to be a permission standard. So we started building on Corda in 2019, when we started really getting into production and getting some clients that were interested in using our tool for their everyday deals. And the idea around that was really to try and move, I would say, the discussion away from, oh, this is a blockchain solution, this is something similar to crypto and so on and so forth, to what is the real value behind it. And we understood that when you present the tool and the solution as in, okay, this tool allows you to do your deals digitally, have some interoperability between platforms, be able to list on a digital exchange in an easier way. Today, for example, if you want to do that, take this asset as collateral to borrow from, DeFi liquidity and so on and so forth. At the end of the day, the user of the platform becomes less, I would say, worried or intrigued about how the technology works in the background, but focuses more on the solutions you can bring to them. Now today, where everyone is in another mindset where you've had this tremendous growth in DeFi, with all types of new protocols and technologies that can be used that have emerged, in the last year and became protocols valued at tens of billions of dollars. And there is a possibility to build across different protocols, use cross-chain solutions, and so on and so forth. What remains to be seen is, out of all of these new innovations that have just gone out, and you said, okay, about these teams that started a project a week ago and grew very fast, to understand further down the line, how many of these solutions are going to follow the market needs and the market demands, and how many of the solutions really understand the underlying problems in the industry they're trying to solve, and follow the needs of their clients with different evolutions. And I think it's a good transition to speak about potentially what we've been focusing on also in the past 6 months, which is a pure DeFi solution, which is
before we jump into the solution.
Yeah.
Can you
Sorry.
let's start with what the problem is that you've kind of like narrowed down on, right? I think that's always really helpful for anyone.
Yeah.
What is the specific, because obviously it's a huge industry. We've just talked about loads and loads of different problems. Which is kind of the problem you guys are really focusing on? What's the starting point? What's the core problem you're attacking?
I'll take it. Yeah.
Elie, before you start, it's about understanding there is a different problem the two products that we have are solving, right?
Yeah.
So we should start, Elie, you can start with because we've spoken about the VDO, which is the traditional finance solution that we have. You can start, let's just tell the
Yeah, so I'll focus mainly on the DeFi solution that we are creating, right? And if you want to go even deeper in the tokenization solution, or what we're building between the DeFi solution and the tokenization solution that we have, we can also dig into that. Speaking purely about DeFi, Stefan, is that okay for you if we only focus on the DeFi
That's
solution?
perfect. Let's start with the problem you're solving, though. I think I really want to make sure that we
Yeah.
like highlight that so people, because a lot of times we jump right to the solution, then it ends up being really confusing if you don't really understand. So let's start.
So today, investing in DeFi is very easy because it's open to everyone. But once you're in front of your key or the protocol that you want to invest in, it's not as easy as it is as investing when you're on Binance. And let me tell you. First, let's say I'm gonna take concrete examples so we make it more realistic for the listener. Let's take Aave. Okay, I deposit on Aave. So the idea of depositing on Aave is to lend some money to someone else. So I deposit, let's say, some ETH. The idea of this deposit is to generate some yield, so I can get it. So I deposit 1 ETH day 1. I go to Aave day 10. I see that I have a position which generated some yield. But what I see on Aave is one number. So I don't see how much I invested, how much fees I paid, how much was the price of Ethereum at that time. I only see how much today I have, which is, if someone is, I would not like to say gambling, but if someone is just putting it to try it, that's okay. But if you are a real investor, a real trader, you would want to know at which position you entered, at what time you entered on that position, what is the price on which you entered, compared to the current price, how much yield you have gained, and what the fee that you paid for the transaction. Now, if you understand a bit blockchain and DeFi, you can start to aggregate those data. Like you can go to, for example, Etherscan to see how much you paid in Ethereum, in ETH for transaction fee. You can take the transaction ID, the timestamp, and check what was the price of Ethereum at that time. But this is a lot of work, and this is only for one transaction. So think about it. This is one protocol, one transaction. What if we have 10 positions on 3 different protocols? So you need to do that work. And today, the funny thing is, we did a survey, and people, when we asked them, some of them, they tell us, I'm not able to track. Like, what are you investing in?
Why does Aave not offer that? Like, what keeps them? This seems like an obvious thing. Like, what keeps the current?
Because so first, it's good because it gives opportunity for a lot of other product, not only us, other product to build some stuff. And the main reason of the existence of Aave is to lend and borrow. You put money, you generate fees, you generate yield, you get this yield. If you interact only with the smart contract of Aave, the only thing that they will give you is your current position. If you want to go and get historical data, you would need to use another protocol, for example, the graph. If you want to know how much fees you paid, Aave does not know how much fees you paid in Ethereum to do that transaction because you're doing it in your wallet. So they would not go and...
Is a technical challenge with it? Like, and this is like an L1 problem? And so they just... or do they just care? They don't
I don't think, and it's not their, I would say, their main proposition. Their main proposition is you deposit money, you generate yield. You borrow money, you put collateral, and you can borrow money and you pay interest on them. This is their proposition. And same thing for DEXs.
I just wondered why they don't offer this. Like, this seems like an obvious thing.
No, but
it's always been really interesting.
Even so, it's very funny that you're asking this question. Even if they offer it, today, if you speak to DeFi investors, no one has only positions on one protocol. And I go back to the same thing that I was saying in the beginning. it's not the same experience on being on a centralized exchange, because Binance is giving you all that data. And on Binance, you can find more or less a lot of pairs that you can trade with. Now, in DeFi, Aave is only a lending borrowing platform. If you want to invest in a liquidity pool, you would have to go to Uniswap. If the pool is very big and you have a smaller amount, then the fees that you would generate by having an LP token is low. So you need to go to another protocol that has a liquidity pool which is much smaller, where you can gain more fees from this liquidity pool. So this makes the problem not only not understanding if you invest in one platform, but it makes it more difficult because you have several platforms that you need to monitor all of them. And imagine you as a trader, instead of having one screen, so you'd need to have like 7 or 8 screen, each screen. Yeah, exactly.
Listen,
Amazing studio.
I like
So
the
guys,
fact that you've made a differentiator between the actual professional investors and the degenerate gamblers,
Like
which I
basically,
generally am on the other side of.
Yeah.
So basically, the issue, guys, the issue we saw like high level is that you have 2.5 trillion worth of crypto out there. I mean, now it's a bit less, and the crypto is sleeping in wallets, like cash is sleeping in bank accounts, right? These people want to put their crypto to work. That's why DeFi is booming. All the protocols are amazing, and out of our research, you have more than half that is basically of the market that's being moved by institutional. These guys don't have proper tool that can allow them to connect their wallet, get their position across protocols like Elie is saying, and then do all of the trading and cool strategies and arbitrage without having to go to each individual platform. We did a big analysis. We interviewed more than 100 funds, sat down with them, and saw that there was a big need to improve their day-to-day operations. For some of them, just to allow them to trade, because they couldn't trade if they didn't have all of their accounting. And that's how basically we entered, the DeFi space with the specific offering. As I told you before, we're following the needs of the market and of our partners, and not the other way around, just inventing an imaginary problem that doesn't exist and get a cool.
I feel like you're just directly attacking Ohm, like just like and Climate and all these guys. Like, hey, they just made it up and it seemed to work. No, but I really want to point out, and I think this is very important.
It's a protocol.
Yeah,
it is really good.
I have a lot of respect to them, honestly.
Tons.
Yeah,
But one of the difference between that is, and again, the technology behind what they built is beautiful. It's fantastic. And regardless of what's happening today, it will change the world. The difference is you guys are coming from, you have to integrate with traditional laws, traditional standards. You can't just operate in this, world that may exist someday, but it's not here now. And so what you guys are describing is a very big difference between, an independent person that just wants to play around and they'll figure out their taxes, they'll figure out their things later. They may not, we don't know. But at the end of the day, institutions, corporations, and funds have a need today to be able to access these protocols and be able to manage reporting. Because let's be clear, I've talked to CPAs around the world. No one is comfortable with what's happening, and you guys are giving at least a fighting chance at a traditional K1.
So, but it doesn't stop there, because what we want to go and where we want to go a bit further with Elie is that all of these very cool tools and this knowledge we've developed for the institutionals, we believe everyday investors and degens should also be able to use them and benefit from them, right? Because these guys all also need to be able to have a view on their portfolio or pay taxes. Maybe they don't always do that, but at least they'll have the possibility with us. And most importantly, be able to trade on these protocols, and potentially also use more complex strategies. And one very cool thing that could happen in the future, and we've had already good feedback on that, is imagine you could take the very well proven and tested strategies of some professional investors and make them available to everyday traders, right? So all of these things, it's not about making all of these cool tools just for the institutionals and completely shunning away from what you would call the retail investors. Is understanding what are the best practices and the best technology and standards we can gain from the institutionals, because they are the ones, supplying us with the good feedback, and further down the line, potentially making it available to everyone.
Maybe jump quickly. Can you give us a quick overview of what you've built? Let's start at like a really high level and then dig in from there.
Yeah, Elie, you wanna
Yeah, sure. Yeah, so what we've built is a multi-step product, and I'll start with tackle the first problem, which is I have some positions, I don't understand how much I earned, how much I paid in fees, and so on. So we call it Merlin, which is our DeFi smart wallet. You just need to either connect to your wallet or to copy paste the wallet and in the browser, and then we'll run some calculation. We are able to connect to DeFi protocols to understand your positions, aggregate a lot of information from Etherscan, from the graph, and so on, to tell you what's on which price you entered, the current price, transaction fee, what's your yield, what's your PNL. Also, one thing that is kind of annoying today on DeFi is that if you invest in the Aave, let's say, they give you some token that called an A token, which is the representing of what you can get in yield. On Compound, you get a C token. On Yearn, you get a Y token. If you invest in a liquidity pool, you get an LP token that is representing half of one currency, half of the other currency. So me as an investor, I want to know what is my position, for example, in DAI, and I will not go and gather the A DAI, C DAI, Y DAI, the LP token in DAI. So what we do is we understand all of this, we extract that information, and we show you DAI on one line. So DAI, your position, holding, your PNL, the yield might be negative because you did some borrowing and so on. And we take into account all your transactions. Now, if you want to go more in detail, you can click on more about this currency, and we show you more your transaction per protocol, your transaction per currency. We choose one currency, how much it has yielded, the PNL, and so on. So it's a clear understanding of what are your contributions. And funny enough, when we were doing some testings, so we started testing with our wallet, like the devs wallet and people from the company. And we realized that none of us made some gain, because when you invest on Ethereum, not a very big amount, you pay a lot of transaction fees, and some investment they were done, end of 2020, so where the market was down, when the market was lower than now, you see. So paying those transaction fees is sometimes crazy on Ethereum. So this is the first thing. This is Merlin. So Merlin, you can think about it as an accounting tool, a DeFi smart wallet.
Hey, sorry, before we move on. Okay, so
yeah.
It's a wallet, it's a browser plugin, or it's a mobile wallet, or both?
It's on the web browser, and we'll release also a mobile application on Apple and on Android.
But like most DeFi trading is not really done on mobile.
Yeah, we've analyzed this, and most it's done via web application, mainly DeFi.
And so, okay, all that information is displayed inside the wallet, or there's a DApp website type situation that gives me all the info? It's like all in one place, or it's two separate?
Yeah, so it's like you go to Etherscan today, you copy paste your wallet, and you get information. You can do the same thing using our platform.
Connect, like I don't have to start. I can still use MetaMask. This is in addition to MetaMask, or it's a replacement?
Yeah, you can either connect your MetaMask, and you'll understand why in the second product, or you can copy paste. If you have several wallets, you can add all of them. And the good thing is that you can add several wallets from different chain, and would be able that this is the same currency from chain 1 and chain 2, and still show you one line of how much DAI. Yes.
Yeah, because that's a huge pain, because everything is different. Okay, how is it differentiated from something like Zapier?
So first, as I told you, we show you only one line about each currency, and we can do multi-chain. And the other thing is we can take historical data. So when we speak about accounting, you don't really care about your instant and current value, even though we can show you how much gain you have done. If you are doing reporting for this on the 31st of December, you want to know at that time how much yield you have received, and you want to know how each transaction, deposit, or whatever you did has generated. So let's say on the 31st of December, I deposited a big amount, let's say 1 million in ETH, but I have some ETH position earlier on from November. I don't want to link the yield that I have generated to the new deposit. I want to link it to the old deposit. We're also able to do that. So what I have spoken about is only our front end, but we are opening up our API so that institutions, they can connect to this API and get historical data, current data, and they can analyze them themselves the way they want. So historical data is something that is not very easy today to do in DeFi, and we are providing this to our customers.
And a lot of this, I want to, kind of preface and it's hard because we're just kind of talking and there's not a bunch of visuals and hopefully one of these days you'll approve my account so I can come in and use the protocol. But there's a lot more than
we'll give you access to the beta testing.
There we go.
Which you can do it tomorrow.
Good, done. So, but there's a lot more that's going on here. And so I want to, kind of say that we're talking about one protocol. And I think that what Stefan's kind of getting at is there is an ecosystem that you've created for professional traders, degens or can obviously use it and they'll benefit from it. But for professional institutions, you have not just the ability to continue using MetaMask or whatever it is and grab their historical trades, but you can actually create deals and you can work, hey, you're going to work data rooms. You're going to coordinate with other team members. So it seems like you guys have really kind of come about this from an enterprise solution more than a degen solution.
So basically, what you're referring to is in terms of the enterprise solution. Both our products, the traditional finance products and the DeFi product are today enterprise solutions, right?
Okay. Now,
what can happen is that the DeFi product and offering that we have can also be distributed to retail further down the line because we've realized they deserve and they can use all of these tools as well themselves. It's very easy, very scalable. They just need to connect the wallet. Now, where it's interesting, and when you speak about the data rooms, like creating deals and so on and so forth, this can relate to either our first product or to where we want to go as our end vision as a company, which is to potentially connect traditional finance with DeFi. And I think we touched upon it last time we met. It's basically the idea that you could in the future have a user of our DeFi platform that has some crypto and wants to put it to work. And instead of just, depositing their assets into a pool or a protocol that is a crypto to crypto one that can generate very good APY, but maybe has some, risk adjusted returns that they don't want to take full exposure in their portfolio. And these guys want to diversify a little bit. They can have the possibility to invest in some of these deals from traditional finance and generate yield and interest that comes from traditional, SMEs, funds, strategies, debt, and so on and so forth. So this is something we're working on, and we believe it can be quite transformational in the sense that, it can help DeFi investors diversify on their strategies, and it can help also, some of their crypto to be put to work and support the real economy. Working already on some,
Sorry. So, that's really interesting, actually, because I think one of the things, like, obviously that's like a very common thesis, right? And I feel like lots of people approach it different ways. Do you actually feel that the DeFi crowd wants diversity into traditional assets? Because I've always struggled to see the audience that really, like, I can totally see Trad wanting to get into DeFi. I'm not sure what the audience of DeFi that wants to diversify is, because that's just it feels like people in crypto are in crypto and they don't want Trad.
So this is if you take into, as an assumption that they will be putting all of their assets into a TradFi strategy, which is not going to be the case. What we're speaking about is a diversification of some of their strategy into, I would say, more reasonable APYs but that can be more stable in the long term. This is what it is. Now, we've already had some indications within the market from other, I would say, projects that are proposing the same thing, that this can definitely be the case. We also know that a lot of DAOs that have that need to be careful with what they do with their treasury could also potentially be interested in such strategies. So obviously the idea is not to take the assumption that you'll have 50% TVL that will go into TradFi. This is never going to be the case. But because we already have these two products and we already be able to propose access into DeFi and access into TradFi, some of the best-in-class deals that we have into TradFi can get an audience in the DeFi community. But then again, as we told you, the first thing all of us are focusing on is making sure we can achieve, what we've proposed to and what we've promised to our users and to our community. So on the DeFi side is to help them navigate through the complexities of reporting and then trading in one simplified and unified tool. And on the TradFi side, it's to digitize our processes and tokenize our assets.
And I think, Stefan, you're referring more to retail investors that are looking those APY of 40, 50, 60. And those currencies or whatever application proposing those APYs, 50%, 60%, for me, they're candy tokens, because the only reason they can propose that APY is by producing more token. And by producing more token, they're devaluating the price. And then an investor, when they start using Merlin, they will realize that the dollar value that they've done on such token is minus. And when they see that, they would realize, okay, I'm really losing. So I need to to start trading against the dollar and not against an APY of 60% of one currency who's being devaluating. Yeah.
I feel personally attacked.
I was
right there.
back in the UK.
But that brings up a very good point, and I think that you guys, again, being bridging, TradFi and DeFi, bring up a very big point that I talk about quite often, and I'd love to hear, kind of your thesis around this. Is how should people be valuating, these cryptocurrencies, because the oracles are, supposed to be, kind of keeping things in check. And to be clear, I see a lot of problems in and around that industry, or around the oracles saying what's worth something based on, one person bought a coin and now all of a sudden the valuation has gone up 1,000x. What's the best way that you guys, and it sounds like Merlin's trying to attack this issue, but how do you guys integrate with oracles, and how do you feel that should change in the future to help people better understand what these APYs actually are?
That's a very hard question.
No, but you're one of the smartest people we've had on here, so I want to hear like what.
Yeah,
This is a big question.
So the problem is you cannot provide 70-80% without producing or putting or adding liquidity to the market. It's impossible. It's really impossible. And we've seen it. So a lot of big protocols, they have a token just to have a token. And some protocol, you can get their token without even investing, without even buying their token, because you just do something on their platform and you get their token. So it's candy token. And it's like in reality, if they tell you this is a bond that is yielding 80%, like you would know that there is something behind it, right?
So we're talking about looks right now, because I feel like now we're talking about looks. Just appear.
There's many things. Like, there's no issue with that, and we have no problem with that, because these are protocols you'll be able to access through our DeFi product.
Yeah,
we're just saying that, and investors should be informed of what's behind that. We're lucky because now we've been dealing a lot with institutionals, but when we go towards a more retail audience, I think your point is right, that maybe on top of the pure accounting and portfolio management tools that we bring to them, it could be good to have some sort of analysis, some sort of intelligence that can be plugged into the platform for people to be informed about, what are the what's behind this API, how is it calculated, and so on and so forth. And I mean, we are investors in all these protocols. We have nothing against them. I think it's really cool. You just need to diversify your portfolio in a way that if this bond explodes or whatever, well, then you're
in fact, when you look at the cryptocurrency, okay, so there is I classify them in three parts. There is one which is payment, like Bitcoin. There is two, which is, I call it blockchain because it's an infrastructure token. And there is three that is DApp token. So a token that can only be used on the platform. So to compete with Bitcoin on the payment, it's very hard. So all the guys that tried in 2017 to build a token that you can pay to go to the gym or whatever, they they don't exist anymore. Blockchain token, very interesting, because blockchain token, you can really have a value behind the token. And the value that you can create behind the token is how much this blockchain is used. Because the more wallet you have on this blockchain, the more transaction you would have. The more transaction you would have, the more fees they would pay. In order for them to pay the fees, they need to buy this token. Same thing with developers. The more developers that are building on that chain, they need to deploy this new code. In order to deploy that new code, you need this currency. So there is an economics behind it. So someone building a blockchain and attaching a token to their blockchain, like ETH or whatever, Avalanche and other, there is a real value. You just go and see the number of transactions, the number of active wallet, and you can get and try to go and take two graphs. One, the number of transactions, and two, the price of the token. And on blockchain tokens, like I named them, you would see a correlation because it's logical, right? Now, the third one is the DApp token. And here we need to be very careful because DApp token, sometimes the token is not related at all to how good the platform is doing. So you can have a platform that is generating millions and millions, but there is no link between how much they've been used and how much the user of the token are benefiting from this usage. So this is risky. Now, to add more complexity to that, you have platform that they create that link, but they produce a lot of token. So even if they're doing millions and millions of generating revenue and redistributing that revenue or whatever they call it to their investors, to their token holders or stakers, they're still producing much more to keep up this high APY, so to get more crowd.
Yeah, and to be clear, it's not a problem of any one protocol. It's an industry, issue that's somewhat that just is one of these things that I believe has to be solved before we'll see true, adoption across the board, because it's really confusing in some cases to just see very small trades move some of these liquidity pools so fast.
Yeah. So the best question to ask yourself: can I use this platform without its token? Or if I remove the token from the formula of how or this ecosystem, can this platform works on its own without the token? If the answer is yes, then of course maybe you should not you should not consider it. Yes, but you can look into that. No, then you should look how famous those guys are, and maybe if they attract a lot of users, it will be beneficial.
I feel like I need to sell.
This is not
I feel like I need to go sell a few positions.
This is, of course, this is not investment advice. I'm not. I'm just a tech guy developing.
No, but yeah. So again, this is really fascinating to hear the talks, because I think a lot of times people don't understand, what's under the hood in blockchain and especially DeFi. DeFi, there's when you're talking about peer to peer, and when we're talking about, again, some really complex, like even the most basic DeFi protocols out there, and yours is much more advanced. Still there's a lot under the hood to make that happen. And understand, you're combining, so many different APIs, or not APIs, but APIs around here. So, jumping forward and kind of into, where VALK is today, and kind of heading, a little bit more into the near future, what's your kind of success goals for 22?
So in terms of what we want to achieve by the end of the year, it's quite similar on the two products. First of all, on the initial one, the TradFi product, we want to continue scaling it. And we have already 100 institutions using it. We want to double that number, and if possible, start having some bulge bracket banks onto the mix, because now we've done really well with boutiques and medium-sized players, which enabled us to scale a lot, and we want to push it further with some larger players. And stay tuned, there'll probably be some announced, we hope, in the next 3 to 4 months. On the DeFi solution, we're beta testing the Merlin solution now with some very interesting buy-side players, hedge funds, and some market makers. We can't say the names, but then again, the idea is to finish and wrap up the beta testing as fast as we can and be able to roll it out to these guys. And then, if you look at the roadmap, once they've used the PMS system, we want to push them to start trading, to start proposing some cool strategies, using the strategies we propose to them. Another, I would say, objective we have, and it was supposed to come a bit later, but now we're pushing it forward, is to also share what we built with Merlin to everyday traders. And I think this we'll try to push it before the end of the semesters to really build on that community and have a lot of feedback and a lot of users on the tool. And finally, what we discussed about the bridge between TradFi and DeFi, the idea would be to be able to execute 1 or 2 landmark deals and transactions before the end of the year, to really show that this can be done, and that it can be, that there is some demand for this bridge vision. This is I would say the main objectives that we have. Obviously, I'm sure further down the road, some things will go faster than we expected. Some things will be longer. The only thing that I'm telling you that we'll be sure is that we'll find a new opportunity, a new type of product to build, because our clients will ask it for us. And we already have, the year hasn't even started probably, we already have a lot of diversions to the roadmap that we need to stay disciplined about. But yeah, and yeah, that's it.
No. So Eli, real quick, is your systems built on actual decentralized platforms, or are you running a centralized software to make all this happen?
If we're speaking about the Merlin and the DeFi aggregator that we're building, it's a dApp.
Okay.
And it's mainly a connector between our platform and different platforms. So we're chain agnostic, because we need to aggregate protocols from different DeFi protocol from different chain. So this will be a dApp. Now our smart contract that will be built to be able to allow the customers to run some DeFi strategies. This will be on Ethereum, but of course it will be a dApp, which is it's a decentralized application. Now the other part, the bridge, I would say it will be half between decentralized and not decentralized, because you understand that there is a lot of regulatory issues in there, and not everyone will be able to use that bridge. So the validators of that bridge will be vetted before they become validators. So I would say semi-permission.
Well, and that's why I was asking, because you
Yes.
guys are when you touch TradFi, like there's lots of laws, regulations,
Right.
and whatever.
Yeah.
So I was really curious how you were attacking that problem. So it's interesting to hear.
So I want to dive back into the TradFi product, right? I think we went
Yeah.
through Merlin. That was really cool. So like, I'd love to get how's the TradFi product different? Like, what does it offer? Like, what is the product? Again, start from a high level and we'll dive in from there.
So first of all, the problem that the TradFi solution solves is the following. Most TradFi institutions, especially in private market and sell side, which are the ones we're targeting, have not made any digital transformation. They just realized during COVID that they could do deals via Zoom, and that maybe it was time for them to start getting some digital systems in place. At the same time that this happened, there is a shift where all the infrastructure behind capital markets will be based on blockchain-based systems and on tokenized assets. So what the TradFi solution offers is 2 things in one. First, with the same tool, which is white label, and they can set it up in 30 minutes, they can go from an analog financial institution to a digital one. So they get a digital back office, digital investor portal, a possibility to upload any kind of deal and have all of their investors, with a digital profile inside their own ecosystem. So they move from just being an analog institution to being a digital ecosystem, digital marketplace, where they can manage their investors, propose deals to them, get all the deal to close into one space. And this is something urgent for most of these institutions. So we enable them to do that, without having to hire a tech team and spend like 6 months brainstorming on how they're going to do this. And then what's interesting is that, without them making any extra effort, we offer them several possibilities, right, where they can get some upside. The first one is they can all have, because their assets are tokenized, a very fluid internal secondary market on their platform. So they can allow, one investor that's gone into this SME, this fund, or this debt deal to, potentially get out of it, and they can arrange liquidity among their network of investors. The second thing is that they can then directly access some liquidity venues through their platform, such as digital exchanges that we're integrating with. And they can also access all of the other platforms and ecosystems that we're powering. So the 100 institutions today that have a VALK platform, they can essentially connect to the other institutions that are using the same platform and send each other deals. And this is possible because the assets are tokenized and everything is running on the same standard. Now, further down the line, the unique differentiator about this TradFi product is that because it allows you to tokenize all the assets that you've uploaded onto it, should you want to have that link with DeFi, should you want to use that asset as collateral, for example, to borrow from DeFi, you can already do it. And we offer that with a very seamless experience without our clients having to hire specialists and tech teams in order to do that. So we solve their problem of today and we prepare them for the infrastructure and the opportunities of tomorrow. This is exactly how it works. All of that in 30 minutes without any headache.
Fantastic.
Cool. Awesome. So I'm curious, how do you solve the contractual issue? Because I think one of the big challenges, obviously, with tokenizing assets is that, like, if there's real world contracts, they would realistically take precedence. So how does that?
So basically what you're tokenizing and what you're putting on the smart contract is exactly the same rules that exist in the traditional existing contract, right? And what this enables is that all of that is coded in the standard that is understandable amongst different platforms. So it brings some value when you want to move that asset from, let's say, one platform to another, if you want to share it and distribute it to a wider audience, from one platform to an exchange, or if you want to take that particular asset, whether it's equity, some paper, fund or whatever, and use it as collateral to borrow, for example, against it. So there's no reinventing the wheel in terms of the financial contract, except if you natively create some sort of new asset. We are replicating the rules that exist today. So who can have access to the deal? If there are some life cycle elements such as interest payments and so on and so forth, they can be put in there. Restrictions around also financial promotion, like who can this be shared to, whitelist, backlist, etc., etc.
It's an L1. It's a DApp. Like, how does it?
So
today it's a DApp, and today our tokenization platform is built on Corda. So think about it as an application that is running on Corda.
Fabulous. Love it. So guys, again, as a few of the, really, like I said, you're at the very center of Web3. DeFi is looking at you now for a little bit of direction and how to integrate with TradFi. What else are you seeing out there that's just got you guys excited? Other projects and like I said, you've been very clear about where you think things are working and not working. But what do you think that is just really cool out there, or any other projects that kind of have you guys going, wow, that's a neat thing?
I think we can speak about several types. We can speak about the projects that are similar to what we do in a sense, and some of them are super interesting, and then some other ones that are in another space. So Elie, maybe I can start very quickly, but like personally, I'm very interested in what Centrifuge is doing. They've built like a very, very cool product, and we were close to the teams, and they have actually put in motion what could have been a chicken and egg problem for many years in the industry, and they have some really cool stuff going ahead.
Hey, what's the description of what they do, just for our listeners that might not.
Yeah, so they've created some pools in which they can, raise money from DeFi investors, and these pools are re-injected and deployed into trade finance assets, and then it can be some other types of assets further down the line. Very close to that. I mean, we love what Maker's doing, not only with DAI, but what they're doing with also financing, taking, what they did with Société Générale. They took a tokenized bond, and created some and refinanced it this way. Obviously, following a lot what Olympus DAO is doing, which is very innovative and has had a lot of success recently. In a completely different ecosystem, but I really like what Trader Joe has achieved in the Avalanche ecosystem, which is and they've managed to achieve some pretty incredible APY and TVL, given their recent existence. Also, our friends at Colony, it's an incubator, an accelerator based on Avalanche, that's doing a great job. And this is on, I would say, for me personally, the projects that I've been following closely, that I would say are close to what we do. Now, if I can just put a little a shout out on more unrelated projects, there's a project that's coming out soon called Ultimate Champions, which is a football play to earn. I mean, soccer, you guys are in the US, play to earn system that's been pushed by and created by an awesome team of ex-Ubisoft guys. So they have, they're huge football fans, and they have that gaming experience. And I can tell you what they're going to push soon is going to be interesting. And then we hear every day about some cool projects. We're advising on one around entertainment and DJs, with some top names as well that are going to come out. So you have no idea about the levels of creativity that exists, especially in all the metaverse stuff. Like,
it's unreal.
It's unreal, and like, there's some real talented and experienced teams that have built these things in the real world and now want to put them onto the metaverse, and we're all about supporting these.
Well,
Sorry.
and really to just tie on to what you said, we're still early. We're still so early in this, and really the innovation and in people understanding what's possible, what's not possible. I mean, we haven't even seen what's possible. You guys, I mean, clearly are some of the most ingrained right now in TradFi and moving that space forward. And you're still in building phase. You're still in conceptual phase in some points. It's awesome. Yeah.
I thought Antoine would speak more about metaverse, because I know that he's a big fan of it.
Yeah, that's my big thing. But sometimes I'm so into it, and I get some ideas that are so like that are so weird that I don't want to tell them online, because
I would be happy to I'll hop on another Zoom with you and brainstorm, because this is what we do all day long as well.
Yeah, so metaverse, I'm excited about it, but not about so there is the metaverse where you're in complete different ecosystem, which is completely digital, which is nice, but myself, I don't really understand it. And there is the metaverse, which is I'm here in my room, or in the street, or in a shop, and there is a lot of NFT stuff that I can buy. This, for me, speaks more to me, and I think this is interesting. Now, about what is exciting me, I can't be more excited than about our own project, because I was telling a friend a week ago, if I had to create a job and work in job, it would be my actual job. So I can't be more excited. So one thing that we are trying to do in DeFi, and it's only the first step that we've done, is really understanding all those smart contracts, that what's happening in them. Like when we do a breakdown of how much you earned, how much you lost, yield, and so on, we are not only understanding your position, but your behavior. Okay, we can understand, are you a good trader, a bad trader? Are you cautious, not cautious, risky, not risky? And I think we can really push this further, because today DeFi is compared to traditional finance and the data that the banks and card provider they have about us. The we have no data today in DeFi, and people are heavily trading. So what's happening about understanding the behavior? It's a technical hurdle that we are trying also to solve.
You know, I'd like to point out and spend another second on that, because I think what you said is actually very profound here, and most people may not understand what it is you just said. Banks, financial institutions, and nation states as well filter the data of currencies, of trades, of the economy to what they want the end user, the human capital, us, to see. And what DeFi and what VALK and others in and around Web3 are trying to do is essentially say the data is all there. How you want, what you want to see and how you want to see it should be the choice of us, the people, not of, you know, a very centralized, closed door, you know, entity of which we're being spoon fed what they think we should see.
And Jay, the funniest thing is that the data that is being analyzed today by private companies, it's not accessible data. The data that we're analyzing is accessible data. It's just that it's not that easy to understand. And blockchain is open to anyone. Like anyone can go and get the data that we're getting, but they just need to structure them in the right way so they are able to understand them, to show them to the user, and so on and so on. And I'm sure that a lot of people will come into that space. So we need to be we need to hurry.
It is. Well, we appreciate you guys trailblazing, and really you are today, and it's absolutely fabulous. So from all of us at yWhales and all around the world, thank you guys for taking the time to swing on in. We know you guys are extremely busy, and one of the things I'd love if you can figure out as well is how to deal with the time zones and the fact that crypto never sleeps. If we could just pause the markets, like maybe just like a 2-hour like you know, just break for everyone to get a minute and check their emails. But absolutely love it. So glad to hear you guys are in the space. Congratulations on all the success. What's the best way for people to find you, learn more, and also apply for maybe beta testing if possible?
Yeah, so for anyone that is interested to have access to our Merlin product, they can go to defi.valktech/wallet, and they can subscribe for the beta testers. We have a big list, but I promise that we'll try to do several phases. And then once you have your email, we can directly inform you about the release and when you can start using this DeFi smart wallet.
And yeah, and we will share with you. I don't know if you can do it in post-prod, Twitter, Telegram, and emails, and you can reach out to us on any of these if there's anything you're happy and especially unhappy about, because these are the comments we wanna hear first.
Well, that's really important. I mean, listen, feedback is part of it, and you guys we've heard how amazing your community is and how responsive you guys are. So again, thanks for swinging by, and we'll catch you guys. I'm excited for an update here probably later on this year. So be good. Thanks.
Perfect.
Thanks, guys.
Thank you.
Thank you.
See you. Bye-bye.
Bye.
Bye.